$240 per ounce. That's not a typo. That's not hopium. That's the price target that one of the most respected technical analysts in the precious metal space, a man who called the 1987 stock market crash, who nailed the 2020 gold bottom almost to the day, is now publicly projecting for silver. And here's what should terrify anyone not paying attention. He's not talking about some distant future decades away. He's talking about a move that's already begun. Michael Oliver, the founder of Momentum Structural Analysis, just went on record in July 2025 on King World News, stating that silver will hit 160 to 240 in the near term. And in December 2025, he doubled down, calling for a minimum of $200 within the next 6 months. If you think silver at $66 right now is expensive, you need to hear what he's seeing in the charts that nobody else is talking about. The next 14 minutes could change how you think about silver forever. Here's what's happening right now that's making Oliver's prediction impossible to ignore. On December 9th, 2025, the Jerusalem Post published a breaking analysis titled Silver Price Alert. Michael Oliver issues Most Important Move in 40 Years warning. Let me read you the exact headline. Silver just blasted into a historic breakout. And Michael Oliver says this is the biggest move in 40 years. Investors have no idea what's coming next. And this isn't just one outlet. King World News published his jaw-dropping interview on July 11th, 2025. Where he laid out the entire technical case for $160 to $240 silver. The Commodity Culture podcast just released a full breakdown where Oliver explained why we're about to see $60 to $70 silver by year end as just the opening act. And here's the part that should make your blood run cold. He's been right on virtually every major call he's made for the last 5 decades. But here's what makes this different from every other bullish silver prediction you've heard. Oliver doesn't use price charts the way normal technical analysts do. He doesn't care about support and resistance. He doesn't trade based on RSI or MACD or any of the standard indicators. His methodology, called Momentum Structural Analysis, measures something completely different: the speed and structural integrity of market moves. And according to his momentum oscillators, silver just triggered a breakout signal that hasn't been seen since the 1970s. So let's break down exactly what Oliver is seeing that makes him so convinced we're headed to 240. The first thing you need to understand is what he calls the spring effect. According to Oliver's analysis, compiled in the U.S. Gold Bureau report from March 2022, silver has been coiling in a massive base pattern for over a decade, specifically from 2011 to the present. Now, most analysts would look at that decade of going nowhere and say, well, silver's a dog, it's underperforming, why would I buy it? But Oliver sees it completely differently. He likens this decade-long consolidation to a compressed spring. And here's his exact logic. The longer a market is suppressed or stays within a tight range, the more violent the eventual breakout will be. It's not gradual, it's explosive. And here's the data that backs this up. In his Commodity Culture interview from 2025, Oliver pointed out that from 2011 to 2020, silver massively underperformed gold. The ratio of silver to gold performance was depressed. But starting in 2021, that ratio jumped to approximately 1.4, meaning silver was rising 1.4% for every 1% rise in gold prices. In Oliver's projection, he believes this performance ratio could rise to as high as 3. Translation, silver could rise 3 times faster than gold over the next 1 to 2 years. Do the math on that. But here's where Oliver's analysis gets really interesting. And this is the part that separates him from every other analyst out there. According to the Jerusalem Post article from December 9th, Oliver stated, "This is the biggest and most important bullish breakout we've seen since the 1970s. Not the 1980s, not 2011, the 1970s. That's the era when silver went from $5 to $50 in 5 months. A 10x move. And here's why he's so confident this time is different." In his Commodity Culture interview, Oliver explained that momentum, not price, tells the real story. He noted that both gold and silver crossed their major momentum breakout levels months before price broke visible resistance levels. Here's his exact quote from that interview. "If you wait for the headlines to tell you silver is running, you're already behind the move. And the data is backing him up. According to King World News on July 11th, 2025, silver broke one of Oliver's key momentum oscillators in July, and afterward moved rapidly to near $30. Then it exploded to the upper 30s. And now, as of December 2025, we're above $66. But Oliver's momentum charts are telling him this is just the beginning. The Jerusalem Post article quoted him saying, "Silver's move is not anywhere near done. The breakout has only just begun." Now here's the part that should terrify short sellers and anyone sitting on the sidelines. Oliver pointed out in his Commodity Culture interview that open interest on silver futures has been falling while prices hit new highs. Let me read you his exact analysis. The recent fall in open interest while silver is hitting new highs is particularly notable. This is immensely bullish, indicating capitulation by the shorts. Translation: the shorts are giving up. They're covering. And when shorts capitulate in a market that's already in a structural deficit, prices don't just go up. They gap up violently. Now let's talk about the gold-silver ratio, because this is where Oliver's $240 target becomes not just possible, but mathematically probable. According to the Jerusalem Post article, Oliver is watching the gold-silver ratio closely. Here's his exact quote from the article. The ratio is signaling something big, and when it goes, silver becomes the rocket ship. Right now, the ratio is sitting around 65 to 68. That's actually below the historical average, which is good for silver. But during major bull markets in precious metals, that ratio doesn't stay at 65. It compresses dramatically. In the 1979-1980 bull run, the ratio got as low as 17 to 1. In 2011, it briefly hit 32 to 1. And Oliver believes we're entering another compression phase. The U.S. Gold Bureau report from March 2022 laid out the math explicitly. If gold reaches $8,000 and the ratio compresses to 33 to 1, silver hits $240. That's not wild speculation. That's just math based on historical ratio behavior during precious metals bull markets. But here's the kicker that nobody else is talking about. According to Saxo Bank's Ole Hansen, writing in December 2025, the gold-silver ratio has been falling like a stone since April 2025. It dropped from above 105 in April to near 68 by the end of the year. That's a 35% collapse in the ratio in just 8 months. And Oliver's momentum charts are saying that collapse is just getting started. If you're still watching right now, do me a quick favor. Smash that subscribe button so this information keeps coming to you before the mainstream figures it out. Most people who watch this far end up thanking themselves 6 months later. When silver's crossed $100 and they got positioned early because they actually paid attention to what the technicals were screaming. I break down precious metals intelligence like this every single week, and YouTube's algorithm only shows my content to people who engage. So hit subscribe, drop a like, and let's keep going because the next section is where Oliver's prediction gets really wild. Here's the unique angle that I haven't seen a single other channel properly explain, and this is what makes Oliver's $240 target not just believable, but historically precedented. Oliver is explicitly comparing the current setup to the 1979-1980 silver bull run. But most people don't actually understand what happened during that period and why Oliver thinks we're about to see it again. Only bigger. In 1979, silver was trading around $5 per ounce in January. By January 1980, just 12 months later, it had hit 50. That's a 900% gain in 1 year. But here's what most people miss. That move wasn't gradual. According to Oliver's analysis in the commodity culture interview, silver went through a vertical acceleration phase where it moved from 10 to 50 in just 5 months. 5 months. And Oliver is seeing the exact same momentum structure setting up right now. In the Jerusalem Post article from December 2025, he stated that he believes the next phase will be characterized by multi-month vertical acceleration, violent upside spikes, rapid repricing across metals and miners, capital rotation from tech and equities into commodities, and a psychological shift where metals become mainstream again. But here's where it gets even more interesting. The U.S. Gold Bureau report points out that if you adjust the 1980 peak of $50 for inflation, silver would need to hit $182 just to match that high in real terms. But Oliver's not calling for 182s. He's calling for 240. Why? Because he believes the monetary environment today is actually more unstable than it was in 1980. Here's his exact reasoning from the Jerusalem Post article. Unlike the rallies of 1980 or 2011, today's setup is structurally deeper. He lists 4 reasons: multi-currency breakouts where gold is breaking long-term ceilings in virtually every major currency, multi-year momentum structures that have fired signals that only appear before historic mega moves, broad asset unrest where global equities, bonds, and currencies are simultaneously destabilizing, and silver's decade-long compression phase, which is unparalleled in modern market history. Now here's the part that connects everything and explains why Oliver thinks this move is imminent, not years away. In his commodity culture interview, Oliver spent considerable time discussing the stock market, and his analysis here is absolutely critical to understanding the silver thesis. Oliver believes the S&P 500 and NASDAQ are in what he calls a broadening top pattern. This is a rare topping formation that's incredibly deceptive because it keeps making new highs, which keeps investors complacent. But according to his momentum analysis, the stock market is already in a topping process, even though price just made new highs. Here's his exact quote from the interview. Momentum of the market. Long-term momentum already argues that you're in a topping process because while price has just nudged a new high, momentum is laughing at it. Momentum is already broken. And here's why this matters for silver. Oliver explained that when the stock market bubble finally breaks, and he thinks that could happen in early 2026, you're going to see a massive capital rotation. But here's the twist. Normally, when stocks crash, money flows into treasury bonds. But Oliver pointed out something critical. T-bonds aren't working this time. His exact words from the commodity culture interview, that leaves you one thing, monetary metals. And he specifically noted that when this capital rotation happens, these people aren't going to go out and buy silver futures. Most people don't do that, but miners, that's a different thing. It's within the stock market. And this brings us to what might be the most explosive part of Oliver's thesis, the mining stocks. According to the Jerusalem Post article, Oliver stated, "The miners are behind, but not for long. Their momentum action says we're on the edge of an upside explosion, and the numbers are already starting to validate this." In his commodity culture interview, Oliver pointed out that Newmont, which is not even an outperformer in the sector, but here's where it gets really interesting. Oliver specifically tracks the SIL ETF, which is the pure silver mining ETF. In his interview, he noted that SIL's 2011 price peak was $95. Even just using basic technical analysis and the size of the 10-year basing range, he argues that SIL will reach that level again, and he thinks it could happen this year. And here's the leverage play that nobody's calculating. Oliver explained that historically, once gold and silver establish confirmed long-term breakouts, mining stocks have delivered leveraged returns of 3x to 8x, depending on the cycle. The Jerusalem Post article stated it explicitly. Historically, once gold and silver establish confirmed long-term breakouts, mining stocks have delivered leveraged returns of 3x, 8x, depending on the cycle. Oliver argues this pattern is about to repeat, only more aggressively, due to years of underinvestment and constrained global supply. Drop a single word in the comments right now. Type momentum if you think Oliver's right and we're headed to 200 plus, or price if you think this is all just technical mumbo-jumbo and fundamentals are what matter. I read every single comment, and it tells me exactly what deep dive to do next. Plus, engaging helps this video reach more people who need to see what is actually happening in the silver market before it's too late. So let's get brutally practical. What does this actually mean for you and your money in 2026? First, understand that if Oliver is even remotely close to correct, we're not talking about a normal bull market where you get 20 or 30% returns. We're talking about a structural repricing event where silver could triple or quadruple from current levels. Here's what Oliver said explicitly in the King World News interview from July 2025. Our expectation remains that silver is highly likely before the end of this year, which is to say a handful of months, take out its all-time nominal highs $50 and end up in the 60-70 range before it even pauses. Not that that's the top, but just the pause. Well, guess what? We're already above 66 $66 as of December 2025. So his initial target has been hit, and he's now calling for minimum $200 within the next 6 months, according to reports from December 2025. That's a 200% gain from current levels in 6 months. But here's the really important part from his analysis. In the commodity culture interview, Oliver made a critical distinction. I don't think it's going up and going to crash back down to $20 or something like that. I think we're in a different global monetary economic environment than we've been in my lifetime. This is not a trade. This is a structural reset. And if he's right, the implications for portfolio positioning are enormous. Now, in the interest of complete transparency, I need to show you the bear case because ignoring it would be intellectually dishonest. The biggest counterargument to Oliver's thesis comes from the fact that he doesn't base his analysis on fundamentals at all. In fact, he's openly dismissive of them. Here's his exact quote from the commodity culture interview. "Fundamentals really do not matter. They are usually coincidental factors." He pointed to the post-2011 period where despite strong supply-demand arguments and ongoing monetary easing, gold and silver prices fell for years. And there's historical precedent for technical analysts getting timing wrong even when they're directionally correct. The fact is, markets can stay irrational longer than you can stay solvent. Just because momentum is breaking out doesn't mean price has to follow immediately. Additionally, Oliver's $240 target is predicated on gold reaching $8,000. What if gold only reaches $5,000 or $6,000? Then the gold-silver ratio math changes significantly, and silver might only reach $150 to $180 instead of $240. There's also the risk that industrial demand could weaken if we enter a global recession. Yes, solar and EV demand is strong, but if the economy tanks, some of that demand could evaporate. But here's the critical thing Oliver emphasized in his commodity culture interview: position sizing matters. He said explicitly, if you're in gold, don't make that mistake that it is driven by uncertainty. No, it's driven by certainty. Certainty that the money units are constantly degrading. So here's where we are. Michael Oliver, this man who called the 1987 stock market crash, who nailed the 2020 precious metals bottom, who has 5 decades of experience in momentum analysis, is on record calling for $160 to $240 silver in the near term. He stated in July 2025 on King World News that silver would hit $160 to $240. In December 2025, he doubled down, calling for a minimum of $200 within 6 months. The Jerusalem Post called this the most important move in 40 years. His momentum oscillators show a breakout structure that hasn't been seen since the 1970s. The gold-silver ratio is collapsing exactly as he predicted. Silver mining stocks are already up 60 to 70%, and he says they're just getting started. I can't tell you what to do with your money, but I can tell you this. When one of the most respected technical analysts in the precious metal space goes on record with a $240 price target and backs it up with momentum analysis, showing the biggest breakout in 40 years, that's not noise, that's signal. If this video gave you clarity on what Michael Oliver is seeing in the silver market right now, smash that like button and subscribe so you don't miss the next update as this story develops. Because if he's right, 2026 is going to be the year that separates the people who understood momentum analysis from the people who waited for CNBC to tell them silver was running. The breakout is real. The momentum is confirmed. And $240 silver is not a dream. It's a structural target backed by 5 decades of technical analysis expertise.